Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Srikanth coming to you live from India's startup capital, Bengaluru, and we kick it off with a thorny issue as far as startups and investors are concerned, particularly at the angel stage, at the early stages, because throughout yesterday and today we've had various investors post updates on Twitter about how upsetting it's been to get notices from the IT department, which considers investment into startups as income and also wants them to pay a capital gain on it. So this is a problem that startups have been grappling with. A lot of investors, right from Mohandas Pai to Rehan Yar Khan to K. Ganesh, have flagged this issue. They're saying that though the government is committed to the idea of Startup India, they've launched various services for it. Clearly, the income tax department is not walking the talk when it comes to treating these startup investments in a fair manner. They end up treating an investment that a startup has raised as income. They expect them to pay tax on that. What is the way out? What's the extent of this problem? For more perspective on that, who better than Saurabh Srivastava, the chairman and co-founder of the Indian Angel Network, joining us right here on Startup Central. So thanks so much for speaking to us. Between yesterday and today, there's been a lot of discussion around this, about how the income tax department seems to be going after startups that have raised investment. Would you agree this is a serious concern? Have many people reached out to you on this?
So this is actually a real problem, because we are the only country in the world that taxes an angel investment as income at regular income tax rates. And it basically is a big problem for startups, because then they have to pay tax on the monies they have raised. This is because the tax is payable on any money that the income tax officer determines is above what they think is a fair market value. And the problem with startups is, how do you determine fair market value? There are rules prescribed by CBDT, but as we all know, the way you value a startup is, what is the quality of the idea, what's the quality of the entrepreneur. It's usually a new idea, so you have to figure out how large the market is, how big will the company be. There's a negotiation. So there is no rule set up by CBDT that could ever be appropriate for valuing a startup. And in fact, different angel groups and different VC funds would value the same startup differently. So in effect, a startup that has no revenues, no profits, just an idea, no collateral, and gets valued at 10 crores or 20 crores, naturally an ITO will say, hey, this is way above the fair market value, which should be maybe zero. So it is a big problem. And CBDT is, in fact, the tax officers are really going to many of the startups and raising notices on taxation. It's causing a lot of concern to the startups and also to the angel investors, who are asked a lot of questions. And so this has seen angel investment substantially dip. I think it's down by 50 or 60%.
Mr. Srivastava, just want to understand, even outside of this, angel investments have seen a dip in the last year or two. So, how fair is it to really place the blame squarely on the doors of the tax man? Isn't it also a function of the market environment? And 1 or 2 years back, practically every second high net worth individual became an angel investor, but they did not stay the course because they didn't see their returns in time. So is it really fair to completely blame the income tax department for the dip you're seeing in angel investments?
Well, firstly, the angel investment is down to less than half, by 50 or 60%. And while the whole concern on the markets, their positioning, whatever, may have some contribution, is not very much, because startups at this stage, angel investments at this stage, are really not connected to what's happening in public markets. I think this angel tax is a big dampener.
Srivastava, what could be a possible solution to this problem? I'm sure you've taken feedback from startups, feedback from investors. What in your mind could be an optimal solution to really ensure that this sort of tax harassment, so to speak, does not happen, particularly when a startup is trying to raise funds and scale its business?
So one thing to understand is that while the startups and angels call it the angel tax, the government didn't introduce this provision of Section 56 to tax genuine angel investments. This provision was introduced to largely try and cut down transactions that were happening which were illegal, where somebody wanted to pay somebody a bribe, but actually instead of paying cash would invest in somebody's relative's company at a high valuation, and so government was trying to protect that. Angel investments unfortunately have become collateral damage. Government does understand that. We have had a lot of discussions. They would like a solution. The government does not want angel investments to be hindered by this provision. So there are 2 or 3 ways to handle this. One solution that we have proposed is that we look at angel investor groups to be recognized, and investments made by such angel investor groups, subject to a certain limit, let's say not more than 10 crores per investment, do not attract this provision. The reason we've said angel investor groups is it may be hard for government to exempt any individuals doing investments of any amount, because that is just what they are trying to prevent. But angel investor groups that are recognized and therefore to some extent regulated, have been approved, have been vetted by government, and therefore these are genuine angel investments where a large number of people are jointly making investments, then perhaps they could be exempted, and that is one way of dealing with this. The second is to just say a de minimis, which is if you have investments that are below a certain threshold, 5 or 10 crore per investment, they don't attract the tax. The advantage, of course, with angel investor groups is that all of the concerns of government with relate to, is this black money, is this tax paid money, have we got all the details, the PAN, the DIN, whatever of the investors in the group will all be there, and an audit trail will exist, and so government will know that there is nothing happening in this transaction that is untoward.
Finally, Mr. Srivastava, have you flagged this issue to the Finance Ministry? Is there any redressal that startups can expect in the upcoming budget?
No, we have certainly made these representations to everybody in government, including the Finance Ministry. All of these representations have gone. Finance Ministry and indeed all other ministries are seized of this problem. They are trying to find a solution. As I mentioned, the SEBI Angel Fund is one solution which is being pursued even as we speak right now. So I am hopeful that a solution will emerge, because it is a problem that the government does want to solve. As I said, this angel tax is kind of collateral damage to something else the government was trying to do, and we do need to get rid of it though, because it is beginning to impact angel investments, and we don't want that, because globally you find that angel investments must be in at least 10 times the number of companies as in VC investments to create that kind of investment pyramid. And this is a class of investments that's just beginning to take off in India. I mean, angel investments over the last 5 or 10 years have already been little under $1 billion. So this is becoming a very serious piece that we all need to encourage.
Thank you so much, sir, for joining us on Startup Central. We will keep in touch with you to really track this development over the next couple of months. If there is some redressal that happens, because remember, Startup India was a big mission of the government. So if the tax and the government are not seeing eye to eye on this front, that certainly needs to be resolved. But moving away from that to a big voice that we have on Startup Central, my colleague Rahul Daima caught up with Microsoft India's president Anant Maheswari at their facility last week and asked him about everything from their plans to push their cloud business in India to the potential they see in India's stack and why Microsoft is betting big on Digital India. Listen into his conversation.
The kind of traction that we've got with customers and partners globally has changed completely over the last year or so. But specifically in India, I have to say that our narrative in India is very similar to the global narrative. The two big parts of our strategy that have played out globally are also very applicable in India. One is a very strong focus on driving digital transformation in key verticals. So I think we are building a lot of capability in banking and financial services, in manufacturing, in retail and the new startup ecosystem, and in healthcare and government, and making a difference. And what's unique about India is the whole IT and the ITES industry, which is going through such a transformative time. So how do you enable that industry that provides digital transformation to the rest of the world? How do you enable that industry to digitally transform itself? So I couldn't have asked for a better time on the vertical side. And the second bit, which is critical to our strategy globally and also playing out in India, is our focus on partners. For a long time, Microsoft has had amongst the best partner networks in the world and in India. Over the last 12 months, we've really pivoted that to say how can partners become a real capability for us in even providing new solutions and new capabilities to our customers. Right. So both of those, I would say, have been the amazing experiences over the last 1 year.
Interesting. Anant, you sort of announced to launch the Azure stack really. Take us through, in terms of cloud adoption, we're seeing several players look at the Indian market very closely. But at Microsoft itself, are you seeing a massive adoption, especially in the area of small and medium enterprises? Because, you had also sort of set out a very encouraging target of reaching out to about 50 million SMBs really. So are you seeing a lot of these adoption out there among them?
Yes. So Microsoft was amongst the earliest investors, I would say, on the opportunity on the cloud in India. Today we do have the 3 data centers that we invested ahead of the curve in India. We also invested in the Cybersecurity Engagement Center in India. Those are all public cloud capabilities that we created. And it's part of a network of more than 100 data centers globally that we have. So Indian customers could have accessed the Microsoft cloud and continue to across the world. Now they also have a local footprint over the last few years that we've been present. Now, other than that, if you really look at the traditional enterprises, they already had a private cloud capability, a private compute capability that they had invested in. And also over a period of time will continue to have that. It's not that that will go away completely. And that's why hybrid is the solution for many of the large enterprises. What is hybrid? Hybrid is very simple, that you and me as users get the complete stack of services, whether you're using private cloud or public cloud.
Got it. As far as small and medium enterprises are concerned, there are you seeing a lot of this massive adoption of cloud, be it various initiatives that that the central government is also taking. You're seeing them really adopt and move forward?
I would say yes, and two things have changed in the last 1 year as I would look at the small and medium business. One is just connectivity. In the past, while we were a 3G and a 4G ready nation with broadband available in many parts of the country, but the consistency at all times in all parts of a city at every location in that city wasn't that consistent experience for the SMBs. And then was the cost. I think all of that has changed in the last 1 year. There is a much higher level of connectivity that's available. And the second bit is the applications. I think with our Office 365 suite and the different capabilities that we provide, you can literally choose the services you want.
Got it. Anant, would you also agree that startups is a big area? You were mentioning in your presentation also that the adoption from startups is also on the rise. You've struck some crucial partnerships, be it with Ola or the others. Will that also be a big focus area as you move ahead? Do you see a lot of this business coming from that?
Absolutely. It's not just about moving ahead. I think we've done a good amount of work there over the last few years. We have the Microsoft Accelerator in India. We've been doing a lot of work with the ISV community where they build solutions on the Microsoft stack. So a lot of that work has happened. Many of these companies are going global with Microsoft. So we've believed in the startup community for a very long time. What you're seeing today, I think, is some of the bigger and more well-known known names amongst the startup community, really leveraging the Microsoft technology in driving the next level of their business.
And Satya Nadella's book Hit Refresh, he really talks about his visit to Bangalore and the disruptive nature of the India stack. So, what opportunity do you really see in India stack? Do you see startups will benefit a lot more, or will large organizations also?
Let me wrap up by saying that the entire Digital India movement is something that I truly believe in, and I know Satya is a big supporter of that, given what he's seen over the years as to how the India story has evolved. So to me, the entire Digital India movement is a big enabler to GDP growth in the future, is the way I would look at it. And a combination of factors are coming together. The Aadhaar, the focus on digital payments, the GST capability, all of that is coming together.
Welcome back to Startup Central, and we end this episode by featuring a budding star, an upcoming startup in the digital media space. We're talking about Transfin, founded by Delhi-based Nikhil Arora, which revolves around content about business, finance and technology. I don't know if we should be worried about that here, but Nikhil Arora joins us from Delhi to really take us through the idea for his startup. Nikhil, in the last couple of years, there's been so much of activity around online media startups across a variety of genres. Just take us through the idea behind Transfin, why you decided to go after this particular segment.
Right. Thanks a lot for having me. Essentially, we started Transfin around in April this year, and we went in live in October. So the idea is to crowdsource content. So when I started looking at the entire digital media domain, it very quickly dawned upon me that most of the players are still operating in a traditional model, right? They have like a in-house team who generate content. And the challenge that I saw in that was that there's always a scalability issue, right? So if you have an in-house team, because content takes a lot of time, it takes a lot of resources. So in order to bring in more and more of it out there, you need to hire more people, you need to invest in technology. Whereas in the online domain, if you look at all the social media platforms, what they essentially do is crowdsource content, right? So, but the difference is that they publish everything that they get instantly. So there is no element of credibility there. So in Transfin, I wanted to bridge the gap between scalability and quality. And so that's why we crowdsource content from our users, but we don't publish it instantly. We go through an editorial cycle within our team and then approve whatever we receive and publish it. So that way whatever content comes out there is backed up.
Nikhil, it's interesting that you decided on business, finance, tech, and you're a startup targeted at millennials. I mean, any survey that you did suggested that they are interested in this in these fields, but they are perhaps not getting it in the format they want. What really led you to choose these three areas?
I think when you look at politics and entertainment and lifestyle, those are fairly crowded spaces. And business, economy and finance and tech are fairly niche areas where I think there is a lot of scope for thoughtful content to come out there. And secondly, when it comes to content, it's not just about the subject matter, it's also a lot about the formats that you use, in the sense that like we try to do multi-format, in the sense that we look at long form, we look at short form, we look at videos, we look at GIFs, animations. And I think those are areas which can be explored much more. And the advantage of looking at business audiences that they generally are difficult to please, but they are very sticky once they like what they see.
The one word that we have to ask startups again and again is monetization. It's particularly different in the media business. A few have experimented with subscription, but I'm not sure what the scale-up opportunity there is. So how do you plan to monetize this going forward, traditional, non-traditional ways? Take us through your own thoughts about that.
I think the online medium is definitely one of those spaces where a free distribution of content and services is expected by the end user, because any end user looks at an internet offering as a utility. So they have paid for their broadband, they've paid for their mobile phone network, and after that they want everything for free. So I think subscription based model, and pretty much all the players are realizing that purely depending on that just does not work beyond the limit. So a freemium is obviously a very interesting model where you have like 70 to 80% content for free and the rest is paid for, which is targeted to more sticky premium audience. Another thing that I think can be explored quite a lot is the entire domain of native advertising and sponsored content, which is different from the banner ad model which a lot of players follow. Because when you look at a native ad, it's basically where the piece of content is value add for the end user, but is also used as a branding vehicle for your advertising client. And that generally has a higher click-through rate, the audience trusts it much more. And I think there is a plenty of scope there. And we are also obviously considering that as one of the monetizing opportunities, but it's fairly early days for us at the moment, so it's still an open question.
On that note, Nikhil, thank you so much for joining us in this edition of Startup Central. We will track the progress of Transfin closely in the coming months. But on that note, completely out of time, thanks so much for watching this episode. Stay tuned to ET Now for news and updates.